As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Ms. Asha Shetty from ICICI Securities Limited. Thank you, and over to you, ma'am.
Thank you, Neha. Good afternoon, everyone. On behalf of ICICI Securities, I welcome you all on the Q1FY25 earnings conference call of Hester Biosciences, and I thank the Hester Biosciences management team for giving us this opportunity to host this call. Today on this call, we have with us Mr. Rajiv Gandhi, CEO and Managing Director, Ms. Priya Gandhi, Executive Director, and Mr. Nikhil Jhawar, CFO. I will now hand over the call to the Hester management team for their opening remarks. Thank you.
Thank you. Good afternoon, everyone. This is Priya Gandhi, Executive Director of Hester. Happy to have you all here for our quarterly update, where I'll walk you all through the performance of the first quarter of FY25. Hope you all have had a chance to look at our results, which just got published a while ago. This quarter has been about setting a strong foundation for the financial year in terms of divisional performances as well as our profitability. We have aligned our efforts to capitalize on emerging market opportunities and drive sustainable growth across all divisions. On the divisional performance, on a standalone basis, sales have increased by 36% quarter on quarter. However, if you see, the overall sales shows a 9% decrease due to a one-time pharmaceutical product sales last year in Q1. But excluding that, our sales have risen. Coming to the animal healthcare division, in Q1, our animal healthcare division experienced a growth of 41%. This growth was driven by both trade as well as tender markets. The domestic dairy sector's positive trend, characterized by a higher consumption of milk and milk products, boosted sales of some of our mineral supplements and intra-mammary products. Our focus on 5 key product brands in the trade market has resulted in an 8% growth for these products. Additionally, we also focused on trade demands and actively participated in the tender markets, focusing on PPR for sheep and goat and goatpox vaccine to immunize cattle against the lumpy skin disease. Looking ahead, we aim to leverage on the anticipated growth in the dairy sector and make offerings to meet the evolving market needs. Speaking of the poultry healthcare division, our poultry healthcare division achieved a growth of 35% in Q1. This quarter, we focused on our core strength, which is vaccines. The recovery of the poultry industry helped us regain momentum, and that aside, our efforts to strengthen technical services in the field, including robust monitoring of vaccine administration and introducing a variant of the Newcastle disease vaccine, contributed to this growth. About the pet care division, the pet care division saw a growth of 29%, with the sales crossing 1 crore in the first quarter, significantly outpacing the market growth of 9%. While our base is relatively low, the percent growth is nonetheless promising. This growth was driven by increased penetration among vet clinics, leading to more prescription of Hester products. Our focus on the prescriptive segment in the pet care addressed unmet needs with products in categories of parasiticide, anti-inflammatory, anti-infectives, contributing to the overall growth. Also, a new launch of a skincare tonic, which we introduced in Q1, proved popular amongst pet owners, addressing seasonal skin conditions effectively. Coming on to the financial performance of Hester India, I'm pleased to share that our profit has increased by 30%. Both EBITDA and PAT have also grown, driven by a focus on high-margin products, strong divisional performance, and improved operational efficiency. Moving on to the consolidated results, divisional sales have increased by 34%, although the overall performance shows a dip due to the one-time sales in the last quarter. About Hester Nepal, Hester Nepal achieved a turnover of 6.3 crores in Q1 compared to 6.5 in Q1 FY24. with a net profit of 2.7 crores in this quarter versus 3.6 crores in the corresponding quarter last year. Hester Nepal has executed export orders against the government tenders and met domestic poultry vaccine needs. This quarter, it has also generated positive cash flows where we have fully paid all bank term loans. Speaking of Hester Africa registered a turnover of 2.8 crores in Q1 compared to 1.7 in the corresponding quarter. EBITDA turned around from negative 95 lakhs to a positive 37 lakhs. However, the quarter ended with an overall loss of 4.9 crores, primarily due to the depreciation and unrealized foreign exchange fluctuation. Hester Africa is vigorously engaging in international tenders and cultivating trade demands across multiple African countries. Overall awareness and demand for the vaccines have been on a rising trajectory. Looking forward, we've set a tone for the year by introducing new initiatives and discontinuing less beneficial ones. Our focus is on leveraging segments within each division to their full potential. We're optimistic about the pet division, having received great feedback on our products and packaging. In the poultry division, we look forward to government support in launching the avian influenza vaccines set to launch by Hester and other companies in the coming year. This, along with our strategic product launches tailored to market needs, will strengthen our position further. In the animal health division, significant investment and effort will be dedicated to R&D with a primary focus in the large animal vaccine needs. Thank you for your continued support and confidence in Hester. We are excited about the opportunities ahead and are committed to delivering sustainable growth and value to our stakeholders. And we now welcome your questions and look forward to a productive discussion. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead.
Hi. So we have seen a drop quarter-on-quarter in the poultry division. So, can this be attributed to higher maize prices and low boiler prices in Q1? And also, looking at the current trend of higher maize prices and boiler prices going down, so, how is the poultry division impacted by this, looking at the current situation? Right now, we are in July 2.
This is Rajiv Gandhi over here. Your first sentence was not clear. We could not hear you properly. But from what I read, you expressed a concern on the downtrend of the poultry healthcare division. I think I'm not understanding what you are referring to, but our sales closed in Q1 at 40.77 crores as against 30.29 in the corresponding Q1 of last year, which is a 35% growth. So may I know what are you referring to?
Sir, I'm referring to quarter-on-quarter sales basically, and also, I'm talking about the current trend in maize prices and maize prices going up.
Current trend on the maize price going up.
Yeah, the current trend on the maize prices going up,
and
etc.
Broiler prices going down.
Broiler, I think you may be referring to the market prices of broiler. This is Shravan month, wherein normally there is always a dip in the broiler prices. This is a cyclical issue every Shravan. But seeing the overall trend, the poultry industry to whom we supply poultry vaccines and health products is in a reasonable good situation as what it was compared to in the last earlier 2 years. And in fact, the feed costs have marginally gone down for the poultry farmers.
Alright, so is that impacting our business in any way currently in, like, we are in Q2 right now, so are we seeing any negative trends in the poultry segment?
No. We are not seeing any negative trend, and we really don't see. And if you look at today's broiler price or yesterday's or 10 days, and we express a concern, I don't think that concern is a valid concern. I think you should not worry about our progress based on today's broiler prices.
All right. So, I mean, we are seeing a healthy Q2 as compared to last year. Right. So, I mean, what is the maximum revenue potential from Nepal, Africa, as well as India units? And what is the current capacity utilization in all three?
In Africa, the total utilization could give us approximately sale of approximately around 60 crores in Nepal. In India, we have I don't have these figures over here right now, on what would be the total sales. You see, one more thing you need to understand is that the sales depends upon the product mix. There are poultry vaccines which are sold in 1,000 dose packs. There are large animal vaccines which are sold in 500 dose packs. So all this is reasonably subjective, and we have we will be commencing on our expanded capacity, for which the expenses have already been incurred, and our freeze drying capacity would be going to more than double than what it is at this point of time.
All right, so when is this commencing?
Sorry?
When will this capacity come in?
Q3.
All right. So, but currently we have not, we're not at full capacity utilization. So how do we expect to, with new capacity coming in, what kind of products will be launching, and what is the rationale for bringing in the capacity when even current capacity is not fully utilized?
Yeah, again, your voice is coming in a very broken manner. Can you repeat the question?
Yeah, is it better now?
Yes.
Yeah, so I'm saying when even the current capacity is not fully utilized, what gives us the confidence of bringing in new capacity and that it will be utilized to optimal levels?
No. I think our current capacity utilization has been near to full at Hester India, and this is an expansion for which the expenses, the capex has already been incurred. So now it is only an upward trend. We are not talking about any capex over here. Also, in Africa and in Nepal, there is no now additional capex that we are making to increase our capacity. So I'm not understanding the issue. I think whether I understand or not, the bottom line is that we have built a good capacity in India. We don't need to spend more. We don't need to spend in Africa. We don't need to spend in Nepal at this point of time. And we have a lot of spare capacity in Nepal as well as in Africa. That is our Tanzania plan.
So what is the outlook for FY25 in terms of growth and the margins that we can expect over FY24? And also with this new capacity coming in India, what kind of additional revenues can we expect as per with the pipeline that we have in FY26?
I would have Priya answer this, but please also keep in mind that we are not here to give any guidances, any confirmed forecasts. We have not done that. We would not want to do that. Before I hand it over to Priya, all that I can say, we are on an upward trend on the top line as well as the bottom line, and we hope to continue with this trend. Over to Priya.
I think
directionally. Yes.
No, I would just to add on to what was said before, I think more than looking at the whole FY, I think what we need to see is that this quarter itself compared to the last quarter, divisional wise, has shown a rise by 37%. So I think that is a good enough indicator. And I started off my talk by saying that this quarter has been a strong foundation in terms of the overall performance as well as profit. So that is what we will be maintaining through the financial year.
And would we be looking at improving our margins? So historically, I mean, we have done 30% margins, operating margins. So, I mean, what kind of outlook do we have in terms of the margin profile?
Our margins have already improved, as you can see in this result itself. So if you want to ask us quantitatively how much more, that's very, very difficult for us to really tell you. But I think you can keep this as a base and for the foreseeable future.
So 21% steady state operating margins is sustainable.
Yes. Can we also have the next questions also? I'm sure people would be waiting in the queue.
Sorry to interrupt you, sir. I request you to come back for a follow-up question. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Richa from Equity Master. Please go ahead.
Thanks for the opportunity and congratulations on a good set of numbers. Sir, my question is, what is the current breakup between vaccine and product revenues, and how is the margin profile in each?
Sorry, we missed the word. What about vaccine?
What is vaccine and products? What is the breakup, and how is the margin profile different for both the segments?
I think we would not really want to give the basic, the breakup between vaccine, health products, etc. Because this is, how much ever more deep we go, then the next thing would be how much would be again poultry vaccines and large animal vaccines, etc. What we can say that vaccine business is at this point of time relatively a bit larger than the health products business, and our focus remains to be on both equally, and the growth potential in the health products is much more bigger than what it is in the vaccine. So this is the way this is just a true market indicator. In terms of profitability, vaccines are relatively more profitable in terms rather than the health products. So this is what it is.
Okay, fair enough. And so my second question is that, in last quarter, there were some challenges that we were facing in Africa. So, of course, there has been better performance. But with regards to those challenges, it was related to currency and, the government orders were delayed. Can you just give us some sense of if the things have improved on that front, or is it company-specific, effort that is leading to better performance in a challenging market condition? What kind of outlook do you have for Africa?
The outlook for Hester Africa for our... You asked specifically on foreign exchange and orders. To answer the foreign exchange, it has been devaluation. It's a routine thing which is not much of a worry to us, though there has been a devaluation. But at the same time, prices of products and all also have gone up. In terms of orders, we are very confident that the business that we are expecting in the private sector as well as tenders from governments, we see a very extremely high visibility at this point of time as we speak. I would not want to make any indirect or direct mention on what is happening, but the Q3 and Q4 results in itself will prove the good progress of Hester Africa.
Okay. So I have more questions, but I'll come back in the queue. Thank you so much.
Thank you.
Thank you. The next question is from the line of Shyam Garg from Ladder Up Finance Limited. Please go ahead.
Congratulations for the good set of numbers, sir, and thanks for the opportunity. My first question is in line with the working capital cycle. If you can explain a little bit, if you can throw some light on working capital, how it was in the corresponding year and the current year, quarter one.
Just a minute, Nikhil. Working capital cycle in the sense of the inventories and debtors is what you are asking for? Yes, sir.
No, overall, he's asking overall working capital needs of the company.
Overall working capital needs from the channel inventories and debtors perspective, believe around 4 to 5 months is what the working capital which we are required to maintain.
So can you please give a little detail on inventory and trade receivables schedules like
well? Inventories, I would say, are primarily the raw materials and work in progress for our vaccine, and for the health products which are traded goods. So that's the inventory we have to maintain at all our depots and branches. So around 2 months is what is the inventory cycle for inventory perspective, and around similar number is for the debtors because of the credit which we are giving in the market.
Okay, sir. And so my second question is with respect to if you can explain how the Africa business is going on and what are the expected numbers for the current year we are expecting from the same, and currency devaluation, which has stabilized now or not.
Yeah, Rajiv here. I just answered that to the earlier question. Africa is showing a lot of positive signs towards orders coming in from within a few months' time, and even the distribution network that we have created. All that I can say that we will be only going up in a geometric progression from where we are at this point of time. You could be rest assured of that. And the African market, it is a tough market, entry barriers, but once in it, we are there because there is very less competition, and plus the distribution channel which we have created via our other company in which we have invested, Trishul Exim. So we are focusing a lot on distribution and marketing, which is actually a very big thing in Africa, because it is not that there is no market. It is that the reachability of products at the last level, that is which is important, and we are focusing on that.
Okay, sir. Thanks for answering my question. I have a few more questions. I'll get back in queue.
Thank you.
Thank you. The next question is from the line of Manish Jain from Gormal One LLP. Please go ahead.
Yeah, hi. Just wanted to know, you mentioned about the low pathogenic avian influenza vaccine. When are you all targeting to launch it in India and outside India?
I think we're planning to do it in Q4 this year. Q4 or maybe Q1 next year.
Okay. And what can be the very rough likelihood of sales in 3 years in India and exports?
Well, you see, the potential for this H9N2 vaccine is reasonably good as far as India and exports. In fact, we see that export even would be a bigger potential place because not too many countries are manufacturing the H9N2 vaccine. In terms of market size, etc., I think we could discuss this on an individual basis where there is some subjectivity, which nothing to hide or nothing not to tell, but I would avoid making any such quantitative forward-looking statements, nothing else at all.
Perfect. And my second question was, we are developing a new Brucella vaccine. So what's the key advantage over existing vaccine? And by when do we expect it to launch?
So brucella, we've not really mentioned about it in this quarter. I mean, of course, it's going to be a recombinant modified vaccine. So there is a lot of work being done in R&D, but we've refrained from really mentioning it now in any of the press notes till we see, something actually coming out. Having said that, it's just going to be a modified version of the conventional vaccine. It's going to be very, very safe. Brucella is a zoonotic disease where it can transmit to the human who's vaccinating, but this will ensure that, the safety level is going to be very high, and it's also going to be performing better in terms of the use of it, which is to enhance productivity in the cattle.
And one more thing, that because it's going to be a modified vaccine, it will be safe for the
Sorry to
person.
interrupt you, sir. Your voice is getting echoed.
My voice is getting echoed?
Yes, sir.
I don't know how this has suddenly happened.
Yes, sir. Is it?
Yeah.
Yeah, it's good. Go.
Is it still?
No, sir. It's good.
Is it?
Go.
Oh, yeah. Okay. So the brucella vaccine, which is under development, is mainly as safe for human beings who are going to be vaccinating the cattle. So that's something which is extremely important on the safety, and on the efficacy. It does not reduce the efficacy from this current S19 brucella vaccine, which is being currently administered.
Thank you so much. I have few more. I'll join back the queue.
Thank you.
Thank you. The next question is from the line of Aniket Kanodia from Smart Sync Services. Please go ahead.
Thank you for taking my question, and congratulations on good set of numbers, sir. Sir, I'll just rephrase one of the questions of the earlier participants. I'm not looking for exact numbers, but in an approximate way, if you can just give us some sense of how big or how much of capacity is utilized and how much is unutilized. Some number or some direction. I'm not looking for exact answers, but some approximation as to how big we can go in Africa, India, and Nepal.
As I told you, in Nepal, we can go up to 50 to 80 crores depending upon the vaccine product mix. At this point of time, we are utilizing only 30% of our capacity. In Africa, it is only 10%, of the capacity. And in India, we have utilized approximately 80% of our capacity. And once this module gets into operation, our capacity utilization at that point of time would be approximately 45%.
Thank you so much, sir. That was very, very, very helpful. And sir, just regarding the poultry vaccine and the poultry market in general. So in the past, when we look at last, say, 8-10 years, what we have seen is that generally it follows a cyclical pattern where 2-3 years of downturn gets after that we see at least a 2-year period of good times in terms of demand for the vaccine. So do we expect something like that has begun over the last 1 or 2 quarters?
I would say the vaccine market, the poultry industry rather, is right now on an upward curve at this point of time. So we can expect this upward curve to remain for a good period of time. It has recently begun. But at this point, I would also like to make a mention that Hester Biosciences as a company is not dependent upon the poultry industry and its status. At one time, yes, before 10 years, 15 years, we were a poultry vaccine manufacturing company, which made us depend completely on poultry, and these cycles would have impacted us a lot. But now with 3 divisions, poultry, animal health, as well as pet, the fastest growing division out of the 3, of course, because it has a small base, our relative dependency on any one division has become reasonably less. the percentage between poultry and animal health is also somewhere like 55:45 or 60:40. So we are reasonably covered, and so that's what it is. And of course, with the pet division growing up, that would again add on to our philosophy on not being dependent on any one division. Your question was not exactly with this, but I presume that was the intent, therefore I made these comments.
No, sir, that was very helpful. That was very helpful for me. And my last question is related to, I'll come back into the chief. I just missed the question. I'll come back into it. Thank you so much, sir.
Thank you. The next follow-up question is from the line of Richa from Equity Master. Please go ahead.
So thank you for the opportunity again. So my question is that, in the press release you have mentioned that, the brands in the trade market are growing at 8%. If you could just elaborate a bit more on, how is the profitability different in a brand versus maybe what's a non-brand, and what is the share of brand, how is it moving? What kind of mix do you see there in the future that could help?
I think what you're mentioning is what we mentioned regarding the key brands in animal health. Is that what you're mentioning?
Yeah, I mean, you have given a figure, right, that it has grown 8% and it will lead to better margins.
Yes.
Leading to better profitability. So I just wanted to know that how is, what percent of the business can be called branded, and how has this mix moved? What do you expect in terms of future, and how is the profitability different?
No, by brand I mean our specific Hester brand is what I meant. But it meant 8 products in a specific category on which we have a focus. Either it is to do with the margin they have, or it is to do with how good they are performing, preference in this segment of our customers. That is, a couple of these things together make it our focus brand, and that has grown by 8% on a quarter-on-quarter basis. And we are not comparing any branded, non-branded. That's not what the comparison is. In fact, the word brand you can disregard. It just means certain focused products.
Okay, understood. And last year,
sorry to interrupt you, ma'am. Your voice is getting. I request you to please follow up. Please get back in the queue. Thank you. The next question is from the line of Anshu Sehgal from Sehgal Capital Advisors LLP. Please go ahead.
Good afternoon. Thanks for taking my question. My first question is, what is the revenue contribution from Africa today? And is this a higher margin business as compared to the India and Nepal business?
Africa contribution, it's there. We have given the consolidated, the sales number is there. We are just looking at that. The margin contribution, it is 2.8 crores in our consolidated total turnover, which is 82 crores, right? 82 is
the total.
Yeah, total. Total. So out of 82 crores, 2.8 is what has come from Africa. It's mentioned on page 3 of our press note. In terms of gross margins, it is more or less in line with what we are in India.
More or less in line, okay. My second question is, on that question of capacity that you just addressed, it seems like, on full capacity from our business, we should be somewhere in the region of 800 to 900 crore in revenues. Is that a fair estimate?
It's honestly very, very difficult to really equate and, make a math equation out of this because, like we said, it really depends on the product mix. We have vaccines ranging from 5 doses to 1,000 doses.
I mean, even 2,000.
Even 2,000 doses in poultry. So, really won't be very accurate for us to say, 800, 900,000. It really, really depends.
And to be putting it very honestly, up all the total of this will not total to 900 crores.
Got it.
Yeah.
Got it. Thanks. And my final question is that we have in the past done 33-34% kind of margins, and in this quarter we've seen a significant uptick in margins. As Ms. Gandhi just mentioned, that this should be looked at as the base for margins in the year. By when do we estimate that we'll reach previous margins? Is that on full capacity utilization that we'll reach that?
It is our internal determination to reach to the margins as what you just asked in your question. And please do keep in mind one thing, that those margins were at a time when there were only vaccines and there were no health products, and that too only poultry vaccines, where the cost of distribution, marketing are relatively low because it's more institutional business as far as poultry vaccines. Since that time till now, we have added health products in poultry, large animal vaccines, large animal health products, as well as pets. While the product mix that we are working towards is to improve our current bottom line, improve our profitability. It is our endeavor to reach that, and we are working towards that. At least this quarter has shown us that a little bit of tweaking that we have done, it has helped us to improve our margins tremendously. The endeavor continues to be in that direction. To give you a timeline on that would be a little difficult at this point of time. But we are working on it.
Sounds good. I have one final question, if you permit me, please, if I can ask.
Yeah, please.
Yeah. So the question is that you spoke about the remodulation of the India capacity to vaccines, and that is animal vaccines. Now, as we understand, this was a capacity which was built for human vaccines, and it is being remodeled for animal vaccines. Was there some write-off taken in this capacity in the past? Is a write-off expected in future? Some costs that were incurred in transferring capacity from one sort of utilization to the other?
I understood your question. You are referring to the DS, the bulk antigen for the COVID vaccine, for which we have set up a BSL-3 facility, which we have made an application to the Government of India to allow us to repurpose this for other vaccines, animal vaccines. We will be using this same facility to make a few vaccines which are already in our pipeline, or one for which we already have a license. There would be a minor modification, not really much, towards converting into our current usage. It would only increase our capacity. It would not lead to much of a financial capex.
Great. Thank you very much. Thanks. That's very clear. Thank you.
Thank you.
Thank you. The next follow-up question is from the line of Richa from Equity Master. Please go ahead.
So thanks for the opportunity. My question is, how much investment have we made in Africa subsidiary?
Africa, totally the investment is $20 million is the total investment made in Hester Africa, our plant in Tanzania.
Okay. And sir, in the last call, I think you were saying that the pet division trend has actually kind of become lukewarm to what you were expecting it. So I just wanted to know the investment we have done so far, and has that, with the growth this quarter, is your outlook better than what it was last year? Do you plan more investments, and if so, how much?
So as you can see, this quarter we've already crossed 1 crore, which obviously took more time in the last financial year. So yes, as I mentioned, the division, the pet segment has only grown by 8 to 9%. There definitely has been an impact post-COVID. There has been lower pet adoption. Having said that, our growth is still 29 to 6% on a quarter-on-quarter basis. Of course, the base is low, but still, I think, yes, we are very, hopeful on this division. There are a couple of introductions, additions that we are going to be doing in the coming quarters. Yes.
Okay, so but is there any planned investment in this segment? Like is there a number to it?
There is no investment plan. We will only be focusing more on introduction of different kinds of products. Our focus is more going to be on the healthcare prescription base as opposed to the other pet segment, which is gaining a lot of popularity, which is more into grooming and accessories, etc. That's not something that our focus is going to be, which is a very crowded market. We're going to be focusing more on prescription-based healthcare-related solutions.
Okay. And just one more question, if I may. What is could you share the breakup between tender business and private business? Maybe for the revenue, for the quarter, or maybe last year, some kind of idea.
I think giving these breakups, ma'am, is a difficult proposition. Not that there is too much of proprietary in that information, but we would not want to get into. We are not even sitting with these papers exactly on the breakup between tender and market, but our main business is definitely private market. That is our focus for sure.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next follow-up question is from the line of Manish Jain from Gormal One LLP. Please go ahead.
Yeah, just wanted to learn about the lumpy vaccine. What is the key difference between, or first of all, is there a difference between the lumpy vaccine that we are developing in India and what we have launched in Africa? That's the first question. And second is, when are we likely to launch this updated LSD vaccine in India?
Okay. Now, lumpy skin disease vaccine introduced by in Hester, Africa, is with the Nithling strain, which is internationally used for LSD vaccine. I'm using the short for name LSD for lumpy skin disease. So we are using the Nithling strain, and in India we are using the strain isolated within India by IVRI and technology acquired from IVRI. So this is the basic difference between the Indian LSD and the African LSD. The African LSD is already commercially launched. We are supplying in a few African countries, and we have even made a supply to one of the Central Asian countries. While in India, our LSD vaccine, we hope to introduce it sometime later in the next calendar year, that is in 2025 later part. But this launch of it later does not impact the sales at this point of time, because we are already supplying the goat pox vaccine, which is giving very high immunity in cattle against lumpy skin disease. But it is always better to have a more specific vaccine, and therefore we will be manufacturing and launching the lumpy skin disease vaccine.
I would also just like to add, whenever we give a tentative timeline of launch, whether it is to do with the lumpy skin or the avian influenza or brucella, these are all based on a set of assumptions and where we are at today. Regulatory standards in India are getting very stringent, even in the veterinary healthcare sphere. These timelines sometimes are not even in our control, but we are working towards the development and the launch. However, there are certain external factors which are not in our hands, which can, make the timelines which we mention here on record vary.
Yeah. We understand. In fact, this acts as a huge entry barrier for anyone else, given that your portfolio is the largest in India. So,
yes. Thanks.
Yeah.
Yes.
And just wanted to get an insight on the PPR vaccine, where, the outlook, because the African market and all the funds got diverted to COVID fight. Have you seen any trend or improvement in the PPR vaccine outlook?
Point number one, FAO and many other world such NGOs, etc., keep on reminding us, make sure that your capacity is enhanced because PPR is going to be required in a very big manner. Now these are sentences coming from all of such agencies. Point number two, it is very evident now that there is a high focus on PPR independently even in countries. Because what has happened is some of the countries have not kept their dependency on international funding and they have started even budgeting for themselves. Even Tanzania is considering to budget itself for the PPR vaccine and 2 other vaccines. So overall, we feel that the PPR sale has been much lower, not only for us worldwide. The PPR requirement have come less, not because of any other reason, but because of this funding and all these situations. But as we see now, there is a little positive upward movement in PPR orders.
Beautiful. Thank you.
Thank you.
Thank you so much for the question. Ladies and gentlemen, we'll take this as the last question. I would now like to hand the conference over to the management for closing comments.
Yes, thank you all. As always, we try to answer as much as possible. Sometimes we have constraints. Sometimes we prefer deliberately not to address certain points. But it is all nothing to do with anything to hide or anything. It is just because of normal business reasons. That is what we do. So please do understand that and keep in mind. And as always, it's been a pleasure interacting with everybody and hope to again reconnect with you in our next call. Priya.
Yes, so in continuation to this, as I had mentioned already, that Q1 has been quite promising for us, as you all have also seen the results, and we owe it to you all to maintain this positive trend and positive trajectory. We may not have been able to answer every single question. There is a time constraint, and also sometimes it gets a bit too specific, but we're always open to connecting on a personal level with any one of you, each one of you, at any point of time. Thank you.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.